What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for super microcomputer, ticker symbol SMCI. This was the viewer's request, and thank you for your donation. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. So my goal for today is show you guys what the market participants are doing based on the technicals and where they're most likely going to take price to next. So let's go over the chart for SMCI on the daily. You can see that price peaked at the looks like the 120 level back here in March of last year. So it's been about a 1 year bear market. And why is it a bear market? Because price continuously makes lower lows and lower highs. So it looks like price is continuously trending down lower, not just a short-term correction, but a long drawn out downtrend. So this is the bear market. And now it looks like price is still bearish. And I'll go over the reasons why for that. So if you connect the swings off the highs, you see that we got a break right over here. However, price quickly broke out and then quickly got back inside the channel or the trend line. So this tells me that the trend line was recovered and it's still technically in play. Now it looks like we're still finding resistance from it as well. So it looks like there's a downward channel in play. You drag it off the highs, even though we had a little breakout here. And again, it's not a big deal. And then we drag it to the lows and it fits pretty good on the other side. And we did see a breakout on this side, which led to a breakout on the opposite side. So everything is pretty symmetrical sometimes in the market. So anyway, we have a downward channel in play. And let's take a look at another bearish indicator. You see that price was previously bouncing from this level right over here at the $40 level. So when price bounced here and here, price had a huge gap down through that level, came back up, cannot stay above it, failed, got back up above it by a large amount, cannot stay above it, failed, and now we're finding resistance right near that level and is targeting lower prices. So it looks like if we do see another large leg down, measuring off the prior impulse right over here, one leg down, right. And then why did we even get that drop? First of all, well, it's because we reached a mesh move target, one leg up right here, and then I'm going to clone the exact same arrow. It's the exact same size of this move up right over here. You drag it to the bottom, and that's basically where price was bound to peak and people take profits right around the high 50s, mid to high 50s. We did reach the high 60s, almost the high 60s. So that just goes to show you it's not 100%. The market is not a 100% thing. Sometimes it will be more emotional and you will get these overshoots or undershoots. So in this case, there was an overshoot. But anyway, price reached a target, was overextended. It was due for a drop. In this case, we saw this drop in this size right here. And now it looks like price is attempting to make a similar size drop once again. So that's targeting right around the 1350 level. So if bulls lose this bullish trend line that we're currently potentially can bounce from, so you connect this low to this low, and now we're right at that trend line again. So if bulls lose this trend line, which there's actually a stronger possibility they do, reason being is because that's basically the only thing I could see stopping price from falling down lower as of right now, then we're going to reach those lower price targets, high 13s, low 14s. So there's a mesh move target currently in play lower. There's a downward channel that price is still within. There's a horizontal level that price is below the $40 and price is below the EMA as well. So overall, the technicals are pointing towards the downside. But again, the market is not 100%. Nothing is guaranteed. The market is dynamic. Things can always change. If we do somehow manage to get that low probability bounce off of this bullish trend line, then we need to see a break above the 40s back into the mid 40s. If we do see that, I think there's a good chance that this will continue much higher from there. Until then, this is still bearish territory, and any small or minor bullish sign or bounce will most likely lead to lower prices. So we need to see strong aggressive buying for me to be bullish bias. As right now, I'm bearish bias. There's a strong bearish imbalance currently on the chart. So again, everything is pointing towards the downside, or not, mostly everything. So I'd be expecting lower prices for SMCI unless somehow price does bounce from this bullish trend line, get back above the $40 level, enter the mid 40s, then things can change. Other than that, most likely we're going to still see lower prices. So that's all I have for SMCI on the daily chart. Let's take a look at the weekly chart. Weekly chart shows more or less the same thing. It's just a more summarized viewpoint. Instead of having, 5 candlesticks in a trading week, we have 1 candlestick to represent the trading week. So that's what the weekly candle is. So this week is bearish, as you can see here. It's a big red drop. And price was once upon a time trading at the low 40s, and now we're trading at the almost the low 30s. So that's what the candle represents. It represents the increase or decrease in price in a given time. So that's why it's red. If it's green, that means that week was bullish. If it's red, that means the week was bearish. So once we lose this bearish trend line, I think it's game over. It's probably going to come back down to retest these prior swings, probably the swing low at the $18 level, and then the measure target at the $13 level. So that's what the chart is telling me. It looks bearish to me. Doesn't look like price is not trying to go up as of right now. And let's take a look at one final chart, log. And this will make a lot more sense why we are seeing a big correction in the market versus any other time since October of 2018. And it just goes to the maturity of the trend. The trend looks to be over. So this first trend line right over here. So that was the first trend line that price set. And then once it got over here, it cannot come back to the trend line. So it was going at a more aggressive rate. So we have a new trend line right over here. And then it happened once again. Price could not come back to the trend line. So then we went in a steeper trend line. And then finally, there was a blow off top final fourth trend line. So generally, you get 3 to 4 in a mature trend in these type of trends. And once price broke the fourth trend line right about here at the 101 level, that was probably the sign, the warning sign. And then once price broke the third trend line from the bottom, that means that it was a red flag, right? It was not supposed to be breaking the trend lines in a bull trend. It's supposed to be either maintaining them or getting steeper. So once we started breaking the trend lines, it was basically wraps. And you can see that, price is in a bear market now. So maybe it'll come back to the first trend line, which is right around that measure move target. Again, no coincidence at all in the market. Where the measure move is where the trend line is potentially can reverse price, a long-term one, which is right around the $13, $14 level, somewhere right around here. So I think with everything displayed in the data and the technicals, I would say it's leaning heavily towards the bearish side based on the daily and weekly charts. And unless price can somehow recover the low to mid 40s, I would be bearish bias. So all I have for SMCI in the daily weekly charts. This is Vee Trades, and thank you for your time.